back with markets at lunch on 80 now.
Personal finance segment, Faye D'Souza is ready. Faye, 31st March.
It's a busy time of the year for me because everybody wants to know how they can save that last minute tax. And after the quick scolding that you didn't start in April last year, we have to help. So we're going to bring in my tax expert, Suresh Surana, who's standing by. He's live right now. He always helps us on the show. So Suresh, thank you so much for joining us. Good afternoon to you. It's that time of the year again, about a fortnight to go before the deadline. And it's likely many of us who are watching right now haven't done our homework. We haven't finished our tax investments. So Suresh, right now, we're going to be looking for the investments which are the fastest to process, that we can maybe buy online or we can finish processing in the next 2 or 3 days. Give us that list. What can we buy in the next 2 or 3 days and submit in time?
Yeah, you are absolutely right. This is a crucial time for the taxpayers and they must make investment in the eligible tax saving instruments before 31st March. The most common instruments which are available, which are eligible for deduction under Section 80C, such as the 5-year term deposit with the bank or deposit in a public provident fund account, the equity linked savings scheme, also any life insurance premium if you pay on the insurance for yourself or your spouse or the children. Apart from that, you also have other items such as if you are repaying the principal amount of a housing loan, or there is a senior citizen savings scheme also which is eligible, and also national saving certificates. So all these are eligible under Section 80C within the overall limit of rupees 1 lakh. Apart from this, there is also 80CCG, which is a new scheme which was introduced in the last year under Rajiv Gandhi savings scheme, where up to rupees 50,000 if you invest, and if you are a first time retail investor having income of less than rupees 12 lakhs, then you can claim 50% of that also as a deduction. So all these things you can do pretty quickly before 31st March and then you will be able to optimize your tax liability.
Well, there's one more thing that we can do as investors, and that is, of course, buy health insurance. Health insurance is now available online. Suresh, how do you recommend we go about buying health insurance right now? Should we just max out the limit of 15,000 rupees on our premium?
Yes, I mean, given the rising cost of the healthcare and the deteriorating, health situation, I think it's always important to consider buying a health insurance policy. Now, under Section 80D, you can claim deduction up to rupees 15,000 for any health insurance you take for yourself and your spouse and your dependent children. But apart from that, if you are taking health insurance premium, if you are paying health insurance premium for your parents, you can claim an additional 15,000. And if they are senior citizens, you can claim up to even 20,000 rupees as a deduction. Now, one thing which you need to consider if you are working in an organization, many of the employers have taken a health insurance sort of coverage for all their employees. So you don't want to duplicate the coverage. So you should check if you are already covered for certain, for certain people or up to certain amount. Then you need not do the duplication of that. Apart from that, it depends upon your age profile and your sort of desire to cover the risk up to what amount you would like to cover. So I think it's a calculated decision which you have to take on all these factors.
A quick recap of what we've learned so far. If you haven't done your tax savings right now, if you have a home loan you're taken care of, there was a list we put out, and then of course health insurance that you can buy online right away. Suresh, once we've bought all of these investments, what's the procedure then? What papers do we need to put together and submit? How can we do this now in the next 10 days or so?
Yes, so Faye, what happens that, it depends on, first of all, whether you are in employment or whether you are having your own sources of income. If you are an employee, then typically you have to submit all the information to your employer to make sure that the tax which he is deducting is proper and he doesn't end up, deducting excess tax. Because if he deducts excess tax, the only remedy for you is to then file the tax return and claim refund, which might be a time-consuming process. So one of the first things you need to do is to make sure that you give to your employer all the details of the investments what you have made, whether it is 80C or 80CCG or basically whatever else, and therefore he considers all that while deducting tax at source. The second thing which sometimes people miss out is that if you are paying interest on any housing loan, even for a self-occupied property up to rupees 1.5 lakhs, you are eligible to claim it as a deduction. And an employer can take that into account while deducting tax at source. So you must need to then in that case give the provisional interest certificate from the bank regarding the interest on housing loan. The other things which are there is that, for example, if you are getting house rent allowance, again house rent allowance is exempted up to certain amount, and but you need to give the details of the house rent actually paid. And there is a new requirement this year which has come, that if you are paying more than 1 lakh rupees as a rent to the landlord, then you have to give the permanent account number of the landlord. So, you know, all these things. Similarly, leave travel, for example, if you are as an employee, you are getting leave travel, there is a new block now from 1st January 2014. And if you take benefit of leave travel in this year, you can claim that exemption. So please make sure you claim all proper exemptions and give all the proof to your employer so that he doesn't deduct excess tax.
All right. So, of course, you have to keep all of the paperwork handy there, and remember to file a copy of everything, so it will come in handy when you file your returns later in the year. Let's take a few questions. Suresh Gulab has written in. He's a senior citizen. He tells us most of his income comes from interest he earns from various investments. He's not paid any advance tax, but the banks have deducted TDS, he says, from his fixed deposits. He wants to know, what should he do? Pay the remaining tax right now because he is in the 30% tax bracket, or should he wait till the 30th of July? So for all senior citizens who are watching right now in the highest tax bracket, what should they do?
Yeah, so Faye, as far as Mr. Gulab is concerned, since he is a senior citizen, there is no need to pay advance tax. There is now no requirement of paying advance tax in case of senior citizens. He can pay the entire amount on 31st July at the time of filing his tax return, and he would be fine. He doesn't have to pay any interest for the delayed, on account of non-payment of advance tax.
All right, good news for you there and for all senior citizens. We have another question. Hari Krishna has written in. He wants to know if he'll be taxed on the money he's kept in his salary account over and above what he's already paying on his salary. So yes, when you make the money, you have to pay income tax, but he wants to know, why does he have to pay tax on the money, the interest that his salary is earning in his bank account? Suresh?
Yeah, so basically, as we discussed earlier, in case all the information has been submitted by him to his employer, and employer is already deducting the entire tax properly, then there is no need for him to pay any further tax on this. When he files the return, he will offer that income and also claim credit for the tax deducted by the employer. However, if there is some case where he has not furnished all the information, and therefore or the employer has not deducted the tax as per applicable provisions, then he might have to end up paying that excess amount of tax. Otherwise, there is no need to pay any additional tax.
All right, I'm being told I have time for one last question. Pavan has also written in. He makes about 40,000 rupees every month. He wants advice on how he can save tax and which tax bracket he falls into. Suresh, can you help him out?
Yeah, so Faye, as far as Mr. Pavan is concerned, he is getting a take-home salary of 40,000 rupees per month, which is definitely going to be in the taxable range. So he has to consider the claiming of various, deductions, like we talked about Section 80C, where up to 1 lakh rupees he can claim deduction. If he is having income less than 12 lakh rupees and is a first-time retail investor, he can claim Rajiv Gandhi equity scheme. There is also a new section which came, which is Section 80EE, which is if he has taken a housing loan of up to rupees 25 lakhs for a new house purchased up to rupees 40 lakhs, then additional 1 lakh rupees he can claim it as a deduction. So this is a new provision which came only this year. If he is eligible, he can do that. There is also Section 80G. If you give donation to any charitable trust up to 10% of your income, you can claim it as a deduction. So what he really need to see is that any of these benefits, what he can claim, he should plan it properly, and then compute his tax liability and see that he doesn't end up paying excess tax.
Suresh, many thanks for joining us on the show. Now, our email ID is on the top of your screen right now. If you have any questions for Suresh or any of our other experts, feel free to write to us. We'll take you back to Nikunj, who will tell us what's been happening in the markets.
Infosys has gone down more.
That's more.
But sugar stocks are up.
Small sector, but look at Infosys. So markets are looking okay. 316 rupees down of Infosys. No recovery in sight whatsoever. A blue chip stock is tanking, and is tanking how?
Oh yes, it is. But with that, we're going to wrap up this edition of Markets at Lunch. I'll be back with the FNO show.